I like how we vibing. 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 I like how we vibing.
This video is sponsored by our channel sponsor, which is 015. You can find them on 015.co.za for some premium web hosting from as little as 45 Rand 90 cents. I mean, 45.90. Think about it. That's not a lot. And you will get some premium domains. And I personally would advise you on getting maybe the Supreme or the Executive packs, because it comes with a lot of benefits and a lot more storage. And you can host multiple websites on one package, you know. And this is, since we are talking businesses and growing your businesses, you can actually get your business registered by them. And there's some benefits, you know. You can get a name reservation, company registration, a certificate, income tax number, and you can even get a free.co.za domain if you pick one of the higher packages, or you can get a free QuickBooks subscription for 3 months. For 3 months. Yo, that's nice. You know, that's really, really nice. And if you want a website, they can actually develop a website for you at a very affordable rate of starting from 2,100, excluding VAT, I think. But it's not a lot. Think about it. 2,100. You spend a lot more on other things. But yeah, and once again, executive plans and supreme plans, you literally get free domains. They, for the first year, they are literally out here trying to win you guys over. Anyway, let's continue with the video. Welcome to another episode of Tech Talk Thursday, and this week we are going to be talking about crypto assets. Over the past few months, we've seen an increase in the use of crypto assets, cryptocurrencies. But what exactly are these crypto assets or cryptocurrencies? Furthermore, what is the tax treatment on these assets? You know, I mean, value of crypto, of Bitcoin and Ethereum have increased heavily since we first started hearing about them. So what are these assets? According to Wikipedia, cryptocurrency is a digital asset designed to work as a medium of exchange, wherein individual coin ownership records are stored in a ledger existing in a form of computerized database using strong cryptography to secure transaction record, to control the creation of additional coins, and to verify the transfer of coin ownership. Cryptocurrency is a form of payment that can be exchanged online for goods and services. If you have ever been to an arcade where you've traded your money for the token to play the game, then you should have a rough idea of how cryptocurrencies work. You know, you exchanged the money for a token. The token has a set amount of value. It can increase in value depending on where you go and what machine you're using, you know, and all those things. What are the tax implications? We need to first identify whether cryptocurrency is an asset, such as the tree that bears the fruit, or income, such as the fruit that are picked from the tree for income tax purposes. Is the cryptocurrency being held for capital investment, where the owner capitalizes on the growth in the value of the cryptocurrency? So let's say you first bought your first Bitcoin in 2014, and then you see that now it's worth XY amount. You decide, you know what, I'm gonna get rid of it today. You literally held that cryptocurrency for capital investment because you waited for the value of it to grow. You didn't just hold it because you wanted to buy something with it, or you thought, no, this, I'm gonna make a quick buck from this. You actually held it for the long run. Is the cryptocurrency being held for sale or exchange for cash? Normally this would apply to miners, people who mine crypto assets, as well as those who traders, for example. If you trade and you buy Bitcoin, you wait for the Bitcoin to increase in value, then you sell it, and then you buy when it's at a lower price, and then you sell it when it's higher. So basically, you are considered a trader, and your main source of income is actually trading and making money from the increased value of whatever you're trading, whether it's stocks, cryptocurrency, forex, etc., etc. And also the same would apply for miners. Also NFTs, Tory Lanez recently, sometime this year, he released an NFT album where he sold over 1 million copies in like 24 hours or something like some crazy time. That would be seen as an income. That's the fruit, So that's basically how you would best figure out where you fall within this bracket. If you don't trade regularly, then you would be most probably falling within the asset bracket. If you are taking it just for the sake of buying, then certain other regulations certain other parts of the Income Tax Act start applying, such as the foreign exchanging rules. It's a very complex one when you start putting in money and buying cryptocurrency for the sake of buying goods. Then it becomes a bit difficult to determine where you fall in the spectrum. But these are the two areas where you would mainly fall. Are you holding it for the long term? Are you not a regular trader? Yes, cool. It's an asset. Are you a miner? Are you a regular trader? Are you using it to sell cash? You sell it for cash? Yes, and it's an income. Simple as that, right? Yeah. What are the implications? Additional tax implications. If the cryptocurrency is being held for sale, then cryptocurrency will be classified as a trading stock, like I said, and it will be subject to normal tax rules. If the cryptocurrency is being held for capital gains, wait, let me go back to the fruit quickly. Let me give you an example. Tory Lanez, let's say in that 1 million copies, he sold that NFT for, and he made about 1 million rand, right? And then the cost of him making that 1 million rand and selling that NFT was like 600 rand. Then he would include in his tax income 1 million, he would deduct 600, and then he would be left with 400. That would be included in his normal taxable income. So then he would obviously, depending if he went through a company, his own company, or maybe he's doing it through himself as Tory Lanez, then depends on the rate. So let's say he did it as himself, then it'd go anywhere between 0 and 45%. So that's what he would get taxed on. He would get taxed on the 400,000 rand. Now, if the cryptocurrency is being held for capital investment, then the crypto asset will be classified as an asset, the tree, and it will be subject to capital gains tax when it's sold. Meaning, the profit on when you bought it, let's say you bought Bitcoin when it was maybe trading at 1,000 rand, and then now you're selling it and your Bitcoin's worth 5,000 rand. Then the 4,000 rand would be then your capital gain, and that would be subject to capital gains tax. Once again, it depends on where you fall in the spectrum. Did you do it through a business, or did you do it as you, the individual? Which is either 80% or 40%, depending on where you are. So let's say you fall in the 40% bracket. Then your 4,000 rand, you're going to times it by 40%, and you will get that will be the amount that you then include in your taxable income bracket. The calculation is a bit lengthy, but most of the time the e-filing system works it out for you, or you can get a tax practitioner to sort you out, or you can ask us to guide you. We can do that. When cryptocurrency is used to purchase goods or services, then normal barter transaction rules will apply. the proceed will equal to the market value, which is very important. The market value of the asset that is being received. Meaning, what you're going to include in your income, your taxable income, is going to be the market value of the asset you've received. So let's say you exchanged 1 Bitcoin for a bottle of Coke. Then, and the Coke is worth 5 Rand. Then what you're going to include in your income would then be the value of the Coke, which is 5 Rand, right? I think that's how much I said the Coke was, 5 Rand. That's basically how the proceeds will then be calculated. And the expenditure will equal to the value of the asset that is being disposed. So let's say the crypto coin or the cryptocurrency that you got rid of at that point was worth 5 Rand or 4 Rand. Then actually, let's work on a loss for once. Let's say the Bitcoin that you sold was worth, or the portion of the Bitcoin that you sold or you used to purchase that Coke was worth 7 Rand. Then you have made a loss. Then your expenditure would be 7 Rand, which means you've made a loss of 2 Rand, right? And that would be added to your taxable income once again. So that's how that works. So it's a bartering system, transaction. If you don't understand, you can drop us a comment. We'll guide you through it. Or alternatively, the SARS Amended Income Tax Act will guide you. It includes the definition of cryptocurrency, and they've added it to the financial instrument section. So yeah, basically that's the one act you need to look at, the Amended Act. In conclusion, if your main aim is to mine for crypto assets, or you are trading Bitcoin, Ethereum, cryptocurrency on a regular basis, then it will be seen as trading stock, and normal tax rule will apply, where whatever profit you make, you include it in your income as it is. Whereas if you're holding the crypto asset for long term, like shares, and waiting for the value of the asset to increase in value over time, then you will account for the capital gains. So meaning either 40% or 80% will then be included in your relevant calculation when you do sell that crypto asset. Normal capital gains rule will apply when you dispose of that, like I said, when you dispose of the asset after holding it for long term or holding it for investment sake. You don't necessarily have to hold it for long term. You can literally buy a Bitcoin today, and then 6 months down the line, you're like, Bitcoin is not doing the most, it's about to drop, let me get rid of it now. That's it. You were not intending on making, or you're not using it as, you are not a trader, so it was not in line with your normal day-to-day business, so it will literally be seen as an asset for you. And that's that. Thank you. If you've got any questions, you can drop us a comment or hit us up. But please don't forget to follow us on Instagram, The Compliance Clinic, on Twitter, The Comp Clinic. You can even check us on this channel, drop a comment, a like, something, But most importantly, go out there and start investing, man. Go out there and start making this money. And yeah, peace, love, and prosperity.